in your currency. Splurging millions, buying houses like Monopoly.
Hey guys and girls, welcome to the No BS with Birchie podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Well. The reality of it is that we go into a system and we get told how to be a good little tax slave and work 40 years of our life to just eventually die at some point. And, it sounds pretty harsh, and it is a harsh reality, but, I think everybody should be, trying to buy back that time that they have to sell by, finding something that's going to help them, do so. And today's topic, that takes me on to today's topic, and that is, why is property the best career, should we call it career, or the best investment? But, there's multiple investments that are really good. So, why is property so great? That might be the better way for us to talk about it, is why is property so great in being a part of a portfolio to help you exit the matrix? And for me personally, I've invested into many different investment classes. So whether it be property, whether it be shares, whether it be buying and selling things, whether it be business, whether it be into cryptocurrencies, whether it be precious metals, you name it. There's all different ways to make money out there. Most people just only have one way of earning money, and they have one income, and that is that they have to get out of bed at 6 o'clock in the morning, brush their teeth. They're like, fuck, I want to sleep, but they can't. They've got to brush their teeth, do their hair, hop in the shower, go to their office, do their job, hop on a train, do whatever it is, and they physically have to earn that income all their life, right? And that's shit, right? Like, tell me who likes the fact that they have to sell 40 years of their life, 40 hours a week, 52 weeks of a year. It's not an exciting way to live your life. So looking at, what other options are, most people only have one option, and that's to earn money and pay bills. That's not a way to live, right? It might be for some, but it shouldn't be, right? There's options there to help you, get out of that system, get out of that debt and death sort of trap that most people fall into. So looking at other options, right? We've got all those other investments, whether it be, businesses, shares, property investing, or whatnot, but they all have their pros and cons. For me, I used to invest a lot into shares. I remember I actually used to day trade shares during the GFC. I was making like $5,000 a day at some point, but then I realized that I got a bit cocky, and I started to not go along my strategy, and it didn't work the best for me. Doesn't mean that I wouldn't buy shares today, but I personally do not own any shares or any paper assets at this point in time, and I do have plans on buying them someday, but I just feel like everything is so overvalued, and I can have more tangible, real wealth that's not just made in an overvalued overvalued valuation on a zombie company. So I'm not a big fan of shares at the moment, but the benefits of shares technically is that you can get in and out of them quick. They're more liquid than a property, etc. But a lot of shares aren't paying returns like they used to. They're very heavily manipulated, and the prices are sort of are pushed up because of are supported due to the fact that the level of stimulus packages and liquidity going out there through the system. So for that, I don't like it. Right? I don't like the fact of the share market, so I don't invest in it. Cryptocurrencies, I love them. I think there's great potential out there in the world with these asset classes. There's a whole new emerging world. Maybe we'll find the Apple, the Amazon, the Netflix, the Googles of the world in cryptocurrencies that could be out there today. Maybe not. Maybe they'll all turn to shit. But there is so much opportunity, there's so much hype. The market's very small. I think that a small part of people's portfolios, they could do well out of it. But, I'm not here to give financial advice, so I'm not telling you to buy them or not buy them. They are liquid like shares, and there's great upside. If you had bought Bitcoin going back 5 years ago for $500 a coin, it's now 75 grand. You could have done a hell of a lot with that profit. Is buying Bitcoin at $75,000 the best investment that you can make it in 2021? I don't know. Right, that's the cool thing about it. There's lots of upside as well as there's a lot of risk as well that you need to protect yourself from. So there is pros and cons to that. If we look at precious metals, that's what a lot of people refer to as God's money. Gold, silver, platinum, copper. There's lots of money out there that people can use like that. But there is a risk with that. So there is no counterparty risk. Every other asset that I've talked about has counterparty risk. The metals, I don't believe are an asset. They're more of a currency or a mean of trade, but they are very harboured against sort of hyperinflation and give you opportunities to trade. So I think for me personally, I like them because they've got a little bit of a opportunity there to use outside of the system and to have as a risk minimisation strategy. But the downside for any sort of precious metals is where I always scratch my head when people say, buy metal, buy gold, buy silver, because there's a lot of people that will talk about the financial markets like I do, but they always say, get silver, get gold, right? And I disagree with those guys because, buying those commodities, you don't have any cash flow coming from them. There's no cash flow involved and you can't leverage it. So, they are, what they are. They're chunks of metal, but they do have their benefits and the pros and cons for people to be able to, invest in and trade in and all that sort of stuff. So, for me, I have a bit of it, but it's not what I would consider my main thing. If we go along to business is great, right? Lots of people have businesses. I've never seen anyone on any of the rich lists out there that work in a job, right? No one in a job has ever hit a rich list. They need another form of investment. So who are the people on the rich list? You've got property people, you've got business people, you've got investors, you've got people that invent stuff. There's all different people on there, but you never see someone that goes, I worked in a job and I'm on the rich list, because it just doesn't happen. So you need another vehicle better than a job, which is tied to you, and it's so risky. I don't know why people don't realise how risky their job is. Why is having a job good? It's worst. It's the worst thing that you could ever have. Right? I'm not telling everyone to go quit their job, but work out a plan, work out a strategy to be able to get out of that job. Work out a strategy on how you're going to be able to build wealth so you can not just look after yourself, you can look after your family, you can look after your spouse, you can look after the lifestyle indefinitely. So the thing that I like about business is that you can leverage yourself, you can leverage your skill set, you can leverage your brand, you can leverage certain things, leverage your time to be able to achieve multiple streams of income. So in a business, you've got staff, you've got inventory, there's many different variables there that you can make a profit on. However, when you're working in a business doesn't just tick along naturally behind the scenes. It needs input, it needs commitment, it needs focus, it needs man hours, it needs attention to keep pushing through to navigate through different markets, to navigate through different cycles. So from a business, it does take a lot of your time. What I think is really important is having a strategy that's in line with everything that you've got and going, okay, how can we make these things most optimized to be able to get you to where you want to be? And for me, I look at it and go, okay, if you've got a business, that's great. You're making good income, but what are you doing with that income? You still got to go back to your business tomorrow and go make some more income, and then you open your business the next day and you make more income. Most people with businesses just have a high paying job. So what do you do with that income? That is the most important part. So if you've got a business, then you want to take that active income that you're going out to work for every day of the week, and then you want to turn that active income into a passive income. And there's multiple different places. So you can get the income coming in from real estate, you can get it coming in from other businesses, you can get it coming in from investing into shares, but we already looked at the risks that are associated with that as well. The reason why I love property so much is that you can take the income, whether it comes from a job, from a business, from a side hustle, whatever it is that you've got the income coming in from, you take your active income and then you go and invest it into a passive investment. So your house, you don't have to go to the house and work at the house every day. Someone's living in it, or the unit, or whatever property you've got. Someone's renting it from you, so they're paying you a passive income. So if you can go and take your active income and turn it into a passive income, that is the main goal of existence of how you want to get income coming through. So it's passive and not active. So for me as an investor, I love property because it has many different aspects to it. One of them is that you can leverage it. So you go and buy you go and save 100 grand, you can put the 100 grand into shares, or you can go buy 100 grand worth of silver or gold, which won't give you a return. Look at all those things. With property, you can put your 100 grand in and then go get a loan at 80% of that and go buy a $500,000 asset. So now you've got an advantage that you've got a property that's worth $500,000, not an asset that's worth $100,000, and you can, if it doubles, then your 500 turns to $1 million instead of your 100 grand turning to 200 grand. So as an investor, I want to make sure, and from the wealthiest people that I've seen and come across and spoken to and whatever, they don't look at what they can sell their time for. They don't look at what they can save from, being a cheap ass. They look at, their net worth position and their cash flow position. So, when it comes to property and investing, you can leverage that asset. You can take your active income and put it into a passive income. The property creates an income. So you want to have income producing properties which bring in cash flow, and then that cash flow pays for the debt. And then once it's paid for the debt, then it pays you for living, and then it can pay for more assets, and it has a compounding effect. So I look at a lot of my properties today in 2021, where the properties used to be, when I purchased them for like 100, 200, 300,000, they could be worth 6, 7, 800,000 now, and the rent is just paying down those deadbeat mortgages and paying themselves off. So I don't have to do anything for it. And the property's gone up so much, if I really wanted to, I could sell something down and pay off more. But, it's being inflated away. So why would I want to sell off an asset that's growing up in value or being inflated away, whichever way you want to look at it? So when it comes to property, it doesn't require me to be at the property working like a job. It can be leveraged. It has cash flow. And these things just keep growing up in value. The reason why they keep going up in value ultimately is because they keep printing more money. But if you're working in a job and you have to earn that money that you're earning is buying you less. So you're losing money by going to a job every day. 50 grand salary or 100 grand salary from a year ago, you can buy half the amount of shit as what you can buy today. Your purchasing power is going down. So you want something that's going to be indexed with inflation. So with inflation actually helps property in a lot of circumstances. It's a backbone of the society. We need to produce, right? So, for example, the risk can be minimized when we look at property, that you actually need someone to build that property, right? So the properties that we have in the country, and most people have in their countries, wherever you're listening to this from, the properties that you've got, right, for someone to rebuild that asset, it's going to cost a lot more because inflation has gone in and hit the bricks, it's hit the tradies, it's hit the sparky, it's hit the paint prices, and everything's rising in value. It's not just the property. So the more that bricks prices go up, the more that incomes and tradies go up, the more that the goods that cost to build the property goes up, the more risk that's being removed from that property that you're purchasing, because to rebuild that property is going to cost a hell of a lot more. So it adds more value to that asset. So that looking at how inflation impacts a property is tremendous. You can outsource most of the work to it. So you wouldn't want to go collect the rent, deal with the tenant or anything like that. Unlike a business, you have to go and deal with your staff and all that sort of stuff. You can employ someone and just say, hey, Mr. Property Manager, take care of this, get me my rent and pay it to me. It's your job to take care of it. So it is more of a passive investment than anything else. Plus, you can have multiples of them because you can leverage it. So the more income streams that you need, the more properties that you just go buy. So there is one greater element that I haven't even talked about, and that is something that I didn't even realize until I was investing for 5 years into property, and that is equity and the leverage from that. So what do I mean by that is, let's say you go buy a property for 200 grand, it rents for $300 a week. It's bringing in that rental income. It's going up in value. But unlike gold and silver, unlike Bitcoin, unlike most shares, you can't go back and pull the equity out of them and go buy more. With a property, you can go back and say, okay, the property's gone from 200,000 to 300,000. I want to go back to the bank and ask them for more loan. You go back to the bank values it at 300. They give you 80% loan of that. Suddenly you've got a loan that's 240 grand. Your old loan used to be 80% of 200 grand, which is 160. So there's $80,000 there that you've got an extra equity. You can use that money to go and purchase another property. So looking at what the property can do a lot more than anything else. the risks surrounding it, probably the biggest one is just that, the availability. You'd have to, if you wanted to sell the property off and collect your money, you'd have to put it on the market, find a buyer, do the due diligence, all that sort of stuff. So it might take you 3-4 months to get your money if you wanted to sell it. That's why I think it's important to be holistic with your investment strategy, which I don't give financial advice, of course, but, having a holistic view on your strategy. And that is to, potentially have a little bit of liquid funds. Like, I don't have any money in cash. If I have money in cash, I get it straight out. Like, I've spent it before it's hit my account. That's my biggest problem, is just like, I just don't want it in there. I've constantly got cash flow coming from my properties, cash flow coming from my other assets, cash flow coming from my businesses, cash flowing into my accounts. But as soon as it hits there, it's already gone. I've allocated it to go outside, and I want it to keep reoccurring. And that's where property has reoccurring cash flow, which is even more amazing than that. So you can add value to your investment. You can renovate it. You can paint it. You can't go into a stock. Let's just use the shares as an example. You can't walk into BHP. You can't walk into Woolworths or wherever the shares that you've bought and say, okay, we're going to start painting this shop and adding value to it. You can't do that to a property. If you wanted to, it's there. Just like the shares, how many companies have gone bankrupt? How many companies have lost all their value? We're not looking at a CEO, boss of some company, and going, okay, well, I've just lost all my money. You've got a property there. You can walk to the house. Someone's not doing rent. You can go and, kick them out and say, hey, you're not doing anything. Legally, of course, we don't want to go and, walk into people's houses and do home invasions and throw them out. But you've got the ability to control that asset. You know where it is. You can touch it. You can see it. You can feel it. It's a physical asset. So I like taking my cash flow when it comes from, in the old days when I used to work in a job, I'd take that cash flow, I'd buy assets. I'd buy some gold, silver. I used to buy shares, but I don't do them anymore. I'd put all my money into property. If the shares went up or the asset went up, I would consider selling it off and then taking that money and using that to buy another property, because a property is like the ultimate asset class because it has so many benefits around it. It has heaps of tax benefits too. So when you look at being an investor, right, I look at being a business owner of a property investment portfolio of my own. So I treat my investment portfolio like a business. The properties have a KPI. They have certain objectives that they need to achieve. So I'm minimizing risk. I'm adding all the potential upside that I can, and I'm making the maximum that I can out of my position. And then when it does achieve its goal, then I either let it sit there and just keep bringing me more cash flow, or I reassess the situation and go from there. So, you can either be an active investor, you can be a passive investor. Some people just buy property and then they sell the property, and with that property, they take the profit. So you could buy a property for $500,000, renovate it or do a development. You sell it for, 600 grand or 700 grand. You make yourself 100, 200 grand, but then you don't have the asset anymore. So I'm not a fan of that. I'm not a fan of, buying a property, flipping it, buying and selling. Because I've never heard people that sit there and go, I'm so glad I sold a property 20 years ago. They're always upset because inflation has taken the assets to the moon. So looking at it, for me, I want to acquire assets. I want to see them get inflated. The more assets that I can take through the higher inflation territories, the better. I want to ensure that the cash flow is strong on them. I want to tick all the boxes. The property has the ability to. So take your active income, whether it come from a business, whether it come from your job, whether it come from trading something, and then, put in a property. That's my aim of it. So that's without telling people what to do or giving them financial advice, but that's just why I believe property is the best vehicle to generate wealth out there in the world. It has so many benefits. It has so many options. And people need to have a roof over their head. That's why the banks lend the most amount of money on it, because it's the most secure form of asset. You don't see them saying, okay, I'm going to lend you some money for some Bitcoin. I'm going to lend you some money for some shares. Yes, I understand you can do margin lending, but it's very volatile and risky to a lot of people. I would never do that personally. The bank ain't going to say, okay, yes, you've got 2 gold nuggets and 2 silver bars. They're not going to give you a loan on that, because they don't see it as a worthwhile investment or a worthwhile asset for them. So, looking at all the parameters of what a property can do, that is why property became my primary vehicle of generating wealth in life. And I thought about it once because I had an incident on a TV morning show where a host asked me, like, aren't you scared you've got $20 million worth of debt? I was on a show when the sun rose in the morning, without telling anyone what TV show it was. And, some person on there gave some orders to ask me a question like, Nathan, you've got $20 million worth of debt. Aren't you concerned? Aren't you scared that if the market collapsed that you'd be in all this debt? And I looked at the host and I said, no, because I'd still have, at the time I had $50 million, to put into context, I had $50 million worth of property at the time and $20 million worth of debt. And I looked at the host and I said, no, because I still got $30 million. And I laughed at her. And then she didn't know what to say. And then it's like, okay, let's put it over to sport, right? But the thing that occurred to me is when I got up, I went to look at my phone and all these people had messaged me saying, oh, it's like, fucking, that's boss, what you just said, whatever. But I thought about it as I was walking off the set and I looked at my phone and I thought to myself, that was the fucking dumbest question I've ever been asked, right? What happens because don't you have a lot of debt? But that's the mindset of a lot of people, is they're fearful of the debt. I'm not looking at the debt. I'm not looking at saving $10. I don't even want money. I hate money. I want to own assets that are going up and appreciating value. And I want to have cash flow coming in. So A, it's paying for that debt and removing all that shit debt that I've got. And then it's just, giving me cash flow so I can have more options in my life. And as I walked off, I realized $50 million worth of asset, of property at the time, minus off the $20 million worth of debt, was $30 million worth of net worth in property. When I say my net worth position, I don't calculate in businesses and other assets and all that sort of stuff. So it's considerably higher. But when I walked off, I was like, I'm 30 years old, right? I've got $30 million. And it really sunk in. It was the coolest question she ever asked. So I walked off, I was like, fuck, that's mad, right? I'm 30 years old. I've got a $30 million net worth in property. That means that every year since the day that I was born, I've earned $1 million worth of position, right? No job could give you $1 million a year. No, or maybe there's a couple of jobs as a CEO of some company where you'd sell your soul to, or whatever the case may be. But businesses, it's hard to make $1 million a year out of business, let alone year after year, since the day you were born. So my properties, I walked off the stage and I was like, wow, my properties are positive cash flow, $500,000 a year, which no one understood. And my properties are, going up in value. They're doing their thing. So for me, that's the benefit of what I can see a property portfolio can do. If you had $100,000 a year coming in, the question I'll leave you guys with is if you had $100,000 a year income coming in from your job, you have to get up every day to earn that. If you can create $100,000 a year passive income, the better question would be, what would you do with your time? What would you do with your life? Because a couple of years of hustle, eating shit and doing the things that you need to do, leaves you in a position where you can do what you want, when you want, how you want, and all that. So hopefully maybe that gives you guys a bit of an understanding as why I just say things as they are, why I don't care about my eloquent language and all that sort of stuff. Because, I have fun with life, because I've built my position into being able to do so. So on that note, I'm going to tune out. I want to thank you all for listening again. You can listen to the No BS with Birchie podcast every Tuesday. We'll be back next week. Head over to B.Invested.com.au if you're interested in getting started or need some guidance to where to turn next with your current property journey. We're now on Spotify, Google and Apple Podcasts, so go and check it out. We'll catch up soon. Bye for now.